What's the message Jay Powell's going to deliver? Does he want this to be as boring a press conference as possible?
I hope so.
For his sake?
For his sake and for all the tweets that'll come blistering out regardless of what he says. I think there might be a little message in the dot plot if we see some of the dots suggesting interest rates may go up in the future. Whether we see that or not, I don't know. You're going to have somebody else from a former Fedi on soon. And
Lakota, Professor Lakota.
Okay.
Hey, thanks for promoting that.
Yeah,
You're doing double duty now.
that's a good question. Do you expect the dot plots to reveal anything other than what we expect?
Yeah.
Otherwise, there's no reason for them to have a meeting. They should stay home, travel safely. There's nothing for them to do.
Well, that's interesting. I mean, of course, a lot of the action, though, we see in the market comes when Jay Powell starts to speak. A year ago, there was a lot of criticism about how he was communicating the Fed's positioning to the market. He seems to have improved a little bit. What do you make of his sort of messaging?
Well, I think Jay Powell's doing a good job.
Yeah.
I like what he's doing. He's being hammered all the time by the White House, by Trump. That's terrible behavior, in my opinion. And meanwhile, he lets it roll and he doesn't get into combat. There is something the Fed could do tomorrow in the statement, in the presser, because there's concern about the repo rate spike repeating, and there's concern about the G-SIB. This is a mouthful for a lot of folks, scoring of the big banks. There are issues. And those issues, whether they get addressed tomorrow or not, we should see. It would be better if the Fed can message calm and says, we know there's a problem in repo. We're not going to let September happen again. We're on top of it. That would be a message markets would like.
Let's talk about the other huge story that's moving markets, and that's trade. I know. That's your response is basically everyone's response.
Trade is a four-letter word now. It's got 5 letters, but it's a 4-letter word.
Fair enough, and I agree. Do you think we'll get just something that is a deal? And I'm not saying something comprehensive, meaningful, anything that meaningfully changes the relationship. But are the demands politically on Trump to do something that doesn't disturb the market going into an election year big enough that we'll get something that can be called a deal?
Joe, I don't expect a deal. If we get it, I don't expect much in it. Trump likes the money. He likes the tariff revenue. He likes to say the Chinese are paying it. We know they're not. It's being collected by American companies, and it's being remitted to the Treasury, and the amount now is about 1/4 of the total interest bill of the United States on its rolling, growing debt. Trump doesn't want to give up the money. He says it in his comments. So I don't see where this goes. Suspending and pushing off the December 15th is good political sense. But any more than, I don't have any expectations. And anything we get out of trade is a speck. I believe we are in a very contentious long-term relationship with China for an entire generation.
Okay, if there is a phase 1 deal or whatever he decides to call a phase 1 deal and he trumps it up as a successful trade deal, that just gets everyone looking ahead to what's next, right? In the what's next category, what's important here? What are actual benchmarks that investors can anticipate?
Well, we're getting a positive thing, Scarlett, in the final conclusion of Mexico, Canada, and the U.S. Okay? So we have a new
Although there's some dispute between the White House and the Senate right now.
Yeah, but it looks like it's going to glue together and happen. Of course, in this instance, nothing happens until it's finally happened. But let's make the assumption it does. So what have we created? We're back to a North American trade zone. And the world is, in my opinion, moving to regional zones. So the European Union is a zone. It really was a trade zone before it was anything else. I don't know what you would describe South America and Central America, the Caribbean now, except disarray. But if you look in Asia, you see zones, and that's the new structure, I think. And at least one, which is the most important one to us, which is Canada, U.S., and Mexico, are coming together now. And that's very positive for the U.S. economy.
Well,
and for them too.
Well, I mean, that's all well and good, but isn't there a big concern here is that China, given the size of their population, given the growth in their middle class, that the U.S. in some way should be a part of that? And we seem to be creating a trade structure where our relationship with China is going to be strained, I guess, to put it mildly.
Romaine, I devoted my entire adult life in organizational structures that sponsored interdependence, trade, dialogue, suppression of belligerency, adaptation, understanding. And that's all being destroyed and replaced with isolationism, protectionism in both barriers and money, tariffs. So for me, it's a painful evolution to watch, but it's the way it's evolving now, and I don't see how it changes.
Real quickly, all these things you describe, isolationism, the growing tension between U.S. and China, change of the global trading order. Meanwhile, stocks have just gone up. So is there a point where the rubber hits the road where for you as an investor, you feel you need to take risk off the table, or is this still kind of an abstraction, it's just not going to affect the market?
You know, one thing about being a money manager is you don't make the policy. You have to play in the policy that's handed to you.
Right.
And we've had a wonderful year. And we're worried because we're professional worriers.
Right.
So where could this market go? Could go higher. What are the alternatives? That's always a question. Right now, our quantitative strategy sold in the middle of November and is completely in cash.
Interesting.
And our structure in our other strategies favors healthcare, overweight, because it's domestic U.S., favors a little piece of the energy sector, a sleeper. So that's a construction. Where it ends, I don't know. It's a bewildering time.